Hey guys, welcome back to another video. So Bitcoin is currently around $92,000. We've bounced from that $80,000 low a few weeks ago, and a lot of people are getting excited about this bounce, thinking, maybe the bottom is in. But there are still two things sort of flashing red to me at least. One, Bitcoin supply is still shifting from long-term holders to short-term holders. That means, coins are moving from strong hands to weak hands. And two, coins have recently been accelerating to exchanges. Not recently, but since 118K, I'll go into that a little bit later. That essentially means that Bitcoin is being moved to places, exchanges where it can be sold. And so today I want to show you exactly what these metrics look like, why they matter, and what they're currently telling us about where we are in the cycle. So let's dive into the charts here. So the first chart I want to talk about today is the short-term holder versus long-term holder supply. This is basically showing us the distribution of Bitcoin supply between these short-term holders and these long-term holders that we can see on chain or on Bitcoin's blockchain. And so the orange line is the short-term holder supply. That's coins held for less than 155 days, so less than about 5 months. And then the blue line here is the long-term holder supply. That's coins being held on chain for 155 days or more. So why does this 155-day threshold, matter? It's statistically significant. It represents basically the point where holders become much less likely to sort of move their coins on chain. Once you've held Bitcoin for 5+ months, you've normally been through some volatility, you've had some time to think about your decisions, and you're typically much more committed to holding long term, right? So short-term holders, on the other hand, are the weaker hands, the newer buyers, the more emotional participants. Long-term holders, we classify them as more of the stronger hands, the more experienced holders, the diamond hands, right? So here's what's interesting right now. Essentially, the short-term holder supply is sitting at around 5.89 million Bitcoin. That's around 29.5% of the total supply, the circulating supply. And long-term holder supply is around 14.07 million Bitcoin. That's around 70.5% of the total circulating supply right now. And so let me show you what's been sort of happening recently. So over the past several months or so, you can see that short-term holder supply has been increasing in the orange here, and long-term holder supply on the other hand has been relatively declining, right? So the blue line here, it means that coins are moving from long-term holders to short-term holders. Long-term holders, the stronger hands, the people who've been holding for 5+ months, they are distributing their coins, right? They're moving coins either to exchanges or other wallets, and those older coins are being classified as newer coins, right? The short-term holder supply. So we're sort of seeing a shift in the composition of who holds Bitcoin, fewer stronger hands and more weaker hands, more newer hands, right? So this is a pretty classic late cycle behavior. During bear markets and early bull markets, you'll typically see the opposite play out, wherein long-term holder supply starts to increase. People start to accumulate and hold, and short-term holder supply relatively, remains flat, right? So, or declining, right? So during bear markets, you'll typically start to see long-term holder supply go up, more people are holding, and then during bull markets, you'll typically see long-term holder supply decrease while short-term holder supply increases. And so during bull markets and bear markets, you'll see the opposite of this. But as the market continues and we get into late cycle, long-term holders typically start to take profits, right? They start to distribute to newer buyers, and short-term holder supply increases subsequently, right? So let me show you a second chart that adds more important context to this sort of narrative here. So this is the short-term holder to long-term holder realized price ratio. And what this is showing is the average price paid by these short-term holders compared to the average price paid by the long-term holders, right? So in the orange line here, that is the short-term holder cost basis. That's the average price paid by the short-term holders. Currently, that's sitting at around $103,000, $103,500. And the green line is the long-term holder cost basis. That's the average price paid by long-term holders. Currently, that's around $36,700. And so the purple line is the ratio between them, right? So currently that ratio is around 2.901. And so what does that mean, right? It means short-term holders paid on average 2.901 times more Bitcoin more for their Bitcoin than compared to long-term holders did. So long-term holders bought their Bitcoin at an average price of $36,000, and short-term holders bought it at an average price of $103,000. And so Bitcoin is currently at around $92,000. So short-term holders, the newer buyers, the ones who bought in the last 155 days, they are underwater. They're sitting on losses. They paid on average $103,000, and Bitcoin is currently $92,000. So long-term holders, the ones who bought more than 155 days ago, they're still sitting on massive profits. They paid on average $37,000 for their Bitcoin on average. Bitcoin is at $92,000, so they're up around 150%, right? And so why does this ratio matter here? So the ratio has been declining recently. You can see these red bars at the bottom here, which basically indicate that the ratio is declining, right? So we're looking at a short-term, a SMA, a simple moving average of 30 days, and you can apply whatever moving average you want, but I like to use the SMA, and using a little bit of higher time frame gives you clearer signals, right? If you were to use a lower term time frame or none at all, the signals get a little bit messier. So we're going to use a 30-day smoothing here. So when this ratio is sort of trending down, this means either one of two things are happening, right? So either Bitcoin's price is falling, which compresses the short-term holder cost basis as they start to realize more losses, or long-term holders are distributing coins at higher prices, and those coins are being bought or being accumulated by shorter-term wallets at lower prices. So right now it is a combination of both of those. So Bitcoin has corrected from around 126,000 to 92,000 and was at 80,000. So some short-term holders have sold at losses, and long-term holders have been distributing at these higher price levels. So the key point is when the ratio is above around 3, short-term holders are significantly underwater relative to longer-term holders. And so they're the weak hands sitting on losses or smaller gains, while longer-term holders are sitting on massive gains, right? So historically, when you get elevated readings like this, so when the ratio is at a really low price, a really low level, and then sort of increases to a much higher level, that's typically when newer buyers are starting to come in. And when the market corrects, on the other hand, those newer buyers are the first ones to panic, and this ratio starts to sort of roll over here. So we saw this first start to go negative at around $111,000. It was previously positive at around $119,000, but it had gone negative at $111,000. And so let me show you another chart here that's sort of the third piece of this puzzle. This is the exchange acceleration chart, and this is measuring whether Bitcoin is accelerating to exchanges or accelerating away from exchanges. And so these green bars here, those green lines here, indicate inflow acceleration. So Bitcoin is accelerating to exchanges. Either more coins are flowing in or fewer coins are flowing out. Either way, the net result is that more Bitcoin is sitting on exchanges compared to going away from exchanges, right? So red bars, on the other hand, are the outflow acceleration. Bitcoin is accelerating away from exchanges. Coins are basically being withdrawn, moving to cold storage, moved to self-custody, whatever the case is. And so this matters because when coins are on exchanges, they can be sold, right? Whereas if coins are off exchanges, they're typically being held for the longer term, right? So inflow acceleration, these green bars here, can be sort of a precursor to selling pressure, right? So it's Bitcoin being positioned to potentially being sold, right? So right now we have been seeing a green bar, so a slight inflow for coins being moved to exchanges. That means since around $118,000 we saw that, right? So the shift from being at negative to positive, it was around $118,000. So that means coins have been accelerating to exchanges since near the all-time highs. And so let me put all these sort of three charts together. So one, short-term holder supply is increasing. Coins are shifting from more stronger hands to weaker hands. Two, the short-term holder to long-term holder ratio is currently around 2.9, meaning newer buyers are significantly underwater. They've paid $103,000 compared to $37,000 compared to long-term holders. There are more weaker hands sitting on losses now because they've bought at much higher levels. And then three, coins are accelerating to exchanges. That supply is moving to a place where it can, potentially be sold. So you have supply leaving strong hands, going to weak hands who are underwater, and those weak hands are potentially moving coins to exchanges where they can, potentially panic if Bitcoin could go lower here. So this is pretty much a textbook late cycle distribution setup, in my opinion. It's not just that long-term holders are moving coins away from their wallets. It's also that short-term holders could potentially, set up for something more worse than what we've seen this cycle so far, and potentially go to what we've seen, for example, in the 2013 and the 2017 cycle, where we saw a massive introduction of new coins going to exchanges, right? So we haven't yet seen those higher levels of inflows to exchanges that we've seen in prior cycles. So that could potentially be a setup for something worse, right? So I do think 2026 will be a bear market year. I do think, although that might be a possibility, I do think there is a potential for Bitcoin to bounce up to higher levels, potentially retest, say, $100,000, $110,000, and potentially put in a lower high from the all-time high in October. And these three metrics, the short-term holder supply, long-term holder supply ratio, the ratio compression, the exchange inflows, are more pieces of evidence supporting that view, in my opinion. You can also look at decreasing ETF flows or other metrics. I still think we're setting up for a sort of meaner version bounce here, like we saw at $80,000, and then potentially continue to go higher into a lower high setup, setting up for that 2026 bear market. And the other pieces I've talked about in previous videos, we broke below the MVRV mean at around $103,000 a couple weeks ago. That's historically been a reliable signal that the parabolic phase is over. Once you get, a couple weekly closes below that level, you can see that in 2022, we basically could not break back above the MVRV mean and the short-term holder cost basis after getting a bounce from the true market mean, right? We've sort of seen that bounce from the true market mean, and now potentially are getting a bounce into those two, moving into those two cost bases. And so two, momentum indicators are still pointing down, like I've talked about in my previous videos. Three, the timing, right? We're in Q4 of the post-halving year, now into December, almost into 2026, right? So Bitcoin has historically topped in all prior Q4s of the post-halving year. We saw that in 2021 November, in 2017 December, in November in December of 2013 as well. And now 4, 5, and 6, right? We've seen long-term holders shifting supply to short-term holders. Newer buyers are underwater, and coins are flowing to exchanges. So to me, this points a pretty clear picture of a late cycle distribution phase. Now, as I've mentioned before, I still think we could see a bounce from here. We've tested that true market mean at $81,000, bounced to around $93,000. I think we could potentially see a move towards 100K, maybe even 110K. But unless we sort of break above 115K, 108K, 109K, and really hold it, and I mean hold it with conviction, with these metrics sort of starting to reverse here. If that doesn't happen, I still think my base case is we put in a lower high and then head over into 2026. And so, what am I watching for here right now? So I think if you look at the short-term holder versus long-term holder distribution, if we get a bounce towards 100K and short-term holder supply continues to increase, meaning more coins are moving from strong hands to weak hands, that would be confirmation of ongoing distribution. That would be bearish, right? On the other hand, if we start to see long-term holder supply increase again, if that blue line starts going up, like we've seen in prior, correction phases for Bitcoin, more so accumulation phases, then that would mean more people are accumulating and holding for the long term. That would be more bullish, in my opinion. And so, secondly, I am watching this ratio. If this continues to start to decompress, if it trends towards 1, that would mean newer buyers are getting better and better prices relative to long-term holders. And so as painful as that is for short-term holders, that compression is typically what happens during corrections in bear markets, right? If we go all the way below and this metric starts to sort of diverge with each other, or sorry, converge with each other, so the short-term holder cost basis starts to go closer and closer to the long-term holder cost basis, that's typically indicative of market cycle bottoms, right? So you saw this little phase here where the two metrics sort of converged here. That marked the bottom in 2022. The same thing in 2019, where these two metrics sort of converged here, and it marked that little area, little tiny moment in time where historically the accumulation was very good, right? In 2015, you saw the same exact thing, and in 2011 and 2012, you saw the same exact thing here. So if the short-term holders cost basis starts to continue to trend down here and sort of converges with the long-term holder cost basis, I think that would be a historically bullish scenario to sort of accumulate more and more Bitcoin there. So we're not there yet, right? We're still at 2.91. And so there's still potential compression to go here, or at least on this metric, right? So third of all, I'm watching the exchange flows. If these green bars continue or intensify, if we see even more acceleration to exchanges, that would suggest that more supply is being positioned to potentially hit the market here. And so if these distribution signals sort of continue, but price manages to break above 115K, 110K and hold, that would sort of make me reconsider my bearish thesis, right? But if distribution continues and we sort of get rejected at $100,000, 105, 110, that would fit the sort of lower high and late cycle distribution narrative. And so another thing I want to talk about is the unit on this metric. So if you look at it on a USD basis compared to a Bitcoin basis, you can sort of see on a more absolute USD denominated, in a more USD denominated view, you can see that we did hit the levels that we saw in 2021 here. So if we look at it compared to 2021, we are starting to see those higher levels of exchange inflows to inflows to exchanges, right? So that's something interesting to look at. So that's all for today, guys. You can track all of these metrics live on chartinspect.com, all these charts, right? If you're a pro member, you can also set alerts on all these charts as well. And another thing I want to mention here is that we have I have implemented two-factor authentication. So you guys can implement two-factor authentication on your accounts now to make it a bit more secure. So if you guys found this video helpful, hit the like, subscribe, comment while you're watching down below. I'll keep tracking these metrics closely and sort of update you as things develop. So thank you guys for watching, and I'll see you guys in the next one. Bye.